there's a cost for that. This lack of diversification exposes you to more risk. Well, in portfolio management on Wall Street, whether it's a big endowment like the A&M endowment, or you and I just managing, maybe my 401k, which is a paltry sum. At the end of the day, I can lower the risk by diversifying and investing a little bit over here. So this is a stock, and a little bit over here on a bond, and a little bit over here in my house, and a little bit over here at cash in case it rains one day. And so my point is that's a readily accepted theory that we lower the risk profile of our investment by diversifying. However, that is not a readily accepted theory in terms of generation and power generation. People think it can be all one way or all the other. I don't think that's the case. I think we can have a diversification. And you guys as engineers can help us solve for that by having an efficient smart grid, allowing us to manage how to move and flow power. But right now you have utilities they're doing very, very well. So there's several here in Texas. They're doing very, very well right now because they signed long-term gas contracts. But 2 years ago, natural gas was quadruple the price. They were taking it in the shorts. Well, if they would have been diversified, they wouldn't have taken it nearly as bad in the shorts. So again, my point here is that it's renewable energy, nuclear, coal, gas, oil. We need it all. The idea is that you lower your risk when you diversify. And just like a stock or a bond, a stock has a higher rate of return than a bond. You wouldn't expect a bond to have the same rate of return as a stock. It's because they have different risk profiles. Similarly, I'm not a huge fan of solar on a massive scale, but I think there's a place for it because it produces solar at the peak time of the day. And it allows us to diversify our sources such that we have a huge cold front and it knocks out a bunch of natural gas peaker plants. If we have winds to supplement it, that means the grid doesn't go down. And in fact, that's what happened this past Christmas, and the head of ERCOT said that. So again, I don't want y'all to get the impression that I'm out here saying only wind and gas will save the world. But there's a value, and if you truly measure the risk, which doesn't often get articulated in the press, if you measure the risk, you measure the real cost, not the price. The cost is that renewables are quite affordable, even without the subsidy. So moving on, so another one, access to capital. I don't want to get stuck kind of in the presentation, but this is in a normal development of a renewable energy project. You have kind of the start, and at the end of the day, it's important. I don't want to get lost in this, but you have different funding of different sources. Mostly you have debt and equity, just like any other entity. And so access to capital must come from different sources, and so these are some of the sources of those things. And so this is just an example that in the renewables business, one of the things that we've been a beneficiary of is that very conservative groups like pension funds and income trusts and life insurance companies have recognized the value in the long-term predictable stability associated with the income stream and in making these investments. And so as a result, you've seen the proliferation of the market. And this is the natural, if you look at any business cycle, when these types of entities are starting to make investments, it's a signal to the market that this is a safe place to be. Of course, it's only as long as the policy is there. That's why it's the junction of, we'll get into it in a bit, the engineering, the part y'all may really get excited about, but it's the junction of policy, engineering, and economics. It truly is. The market infrastructure. So, has anybody ever heard of some of these names? These are some big names. Siemens, I would say Siemens and GE aren't solely green companies or renewable companies. They're in everything. And the reason being, for the same reasons, and we talk to GE Capital and GE Turbines regularly, is that they wanted a diversified business. They saw that as a way to lower their risk and also to take advantage of profit. And so again, I just would keep if I could leave you one thought, renewable energy is apolitical. It's only for people that are uninformed, in my opinion, that take a strong stance one way or the other. We need a place for everything. So anyways, the point of this is that these are the types of supporting environments you would need to support a long-term policy and a long-term business such that you'd be eventually successful on a long-term basis. And then lastly, probably the most important one is the demand. I attempted, I couldn't find it in time, but at the end of the day, what this is showing, and I'll show you a little bit more historical slide, is that renewable energy, again, to the point I was trying to make, is that we're not looking to take up the whole pie. No doubt there are people out there. Al Gore, he's a kind of a polarizing figure, would say we can save the world with with wind and solar. I would disagree. But it's got a place. It's got a piece of a seat at the table. And the reality is that even with our massive supplies of oil and gas via the shale plays, which are wonderful, my family's personally benefiting from this in South Texas, is that it's all right if these guys don't have quite as big a piece of the pie. You know? It's all right. Moving on. So wind in Texas. Texas, this is a really cool part. If Texas, this is a slightly dated slide, but if Texas were if we were our own country again, we would be depending upon how you measure it, the 3rd or 5th most populous country for wind in the world. So if you want to see wind, you are in the #1 place in the world for wind to see it. And not only that, but it has a different profile. It blows differently here than it does here than it does here. And so this idea of we don't only have wind diversification, it blows differently at different times. Down here, wind is much more valuable, even doesn't blow nearly as fast as it does up here. It's because it blows in the afternoon. So I grew up going to the coast as a summer, and if you recall when you were a little kid, you could fly a kite early in the morning and late afternoon. Well, ironically, that's the times when people come to school, come to businesses and offices, and they turn on the power, they turn on the air conditioner, and the sun's out. Well, sure enough, the wind blows right then. In Amarillo, it doesn't, but it blows so dang strong that even at midnight when it's blowing, even in the afternoon when it's not blowing nearly as hard, it's still sending power onto the grid. So the point being is this idea of diversification is a good thing. Texas is a big proponent of business. So not everyone would agree with it. The Public Utility Commission set aside $5 billion to support getting this widget, this product that we have, getting it to the markets. Because a lot of it does reside right up here and right up here in places where there aren't people. But if you can't get your product to market, it doesn't do you a lot of good. And so the state quite intelligently said, look, we've got this great product, but we can't get it to market. We should facilitate a channel to get it to market. And that's what this allows for, this CREZ build-out, or Competitive Renewable Energy Zones. Just a cool, fun fact for the day. The largest wind farm in the world right now is in Texas. Again, it's kind of cool. And then lastly, this is from a little historical data piece. It's slightly dated, but you can see that wind has grown over time. Its percentage of generation, not only in capacity, but in actual in terms of usage, has grown over time. And that's because we've had ERCOT, the grid manager, has started to learn quite progressively how to manage these resources. I met earlier today with College Station Utilities and Bryan Utilities. College Station does not, but DTU, or Bryan Texas Utilities, has a guy that's a trader. And he balances their wind, so he trades it. There's a guy named Wayne Thomas. And so it's really cool because it's supporting really cool jobs that you guys could very well have one day. And these guys, these guys didn't go to Berkeley. They're pretty conservative dudes. So before we move to the next step, do y'all have any questions? Again, this is an open question. There's no question that's off the table. And just feel free to raise your hand. I'll just keep going. So, yes, sir.
In one of the slides which you showed earlier, there's a column for consultants.
Yes,
Yeah,
right there.
What exactly is the consultant's role in infrastructure?
Sure. So I'll put it, let me think of this. I'm trying to give you a good analogy. So all of this is funded. Even, remember these great ideas that you guys are coming up with in college now? You're like, oh man, I want to build a business around this, or I could revolutionize the world if they would just take my idea, right? Well, that idea is only as good as the banker that'll lend you money to it, right? So my point is that bankers don't like to believe anyone. They don't believe anyone, especially the guy that's wanting the money, right? So you're Mr. Lender, I'm Mr. Developer, and I come to you and I say, I've got a deal for you. I'm a wind developer, and I'm going to sell you some wind, and I've got a guy over here, Mr. Utility, that's going to buy the wind. He says, I want to buy it, I want to buy it. And I say, I want to sell it, I want to sell it. And you say, I want to give you some money, right? No, you say, all right, prove it, right? You don't tell your professors how great your theories are. They say, okay, I'll listen to you, especially at the graduate level, they'll listen to you more. But they'll say, show me your formula or your theorem, right? Back it up, prove it on paper. And they say, well, and I don't want you to verify it. I want her, who's got 3 PhDs and 25 PhDs on staff to verify it. Because if I'm going to lend you millions of dollars, I want to know, not that he's going to buy it, not that you're going to produce it. I want to know that it's going to be there. Because these contracts are done for 20 and 25 years. They're power plants. Some people call them sexy because they're the latest, greatest thing, but they're power plants. So just like a nuclear plant, just like that ugly one in Bryan, they're power plants. So these are the types of consultants. These guys are the most bankable. They're the high dollar guys. They're out in Portland. It costs about $40,000 from their studies. V-Bar, they're a cool group in California. They validate our wind. They measure it and they put up wind towers. These guys put up wind towers. These guys are environmental guys. And there's an endless list of them, and there probably a lot of them will employ you one day because they hire a lot of engineers, a lot of people a lot smarter than me, that I have to go to convince the bank to give me money, and they say, well, where's your engineer that's going to prove it up? And I say, what is your name?
Mazu.
I say, Mazu, give me my report, and I'll pay you a bunch of money. And you say, okay. And this is stuff that I hated to do in school, that you guys love. I'll pay you a lot of money one day to do it. Yes.
Yeah, I'm sorry, I have some doubt about this diversified energy. Like, I mean, for the computer, we have to, I want to Apple, you want to HP, it's okay. But the energy is energy. I mean, I don't care where it's from. I mean, the electricity, no, there is no difference. The only difference is the cost. And you said it's not price, it's cost.
Right.
So, since the energy with the lowest cost will wipe out all other energy.
But what do you think? So how about I'm a natural gas plant, right?
Mm-hmm.
What is the obvious question? But what do I need to produce my energy, my electricity? I need natural gas, right?
Yeah.
That's my fuel.
Mm-hmm.
In the industry term, that's called feedstock. What is your fuel source? Well, I don't know if you've looked at commodity markets lately, but natural gas today is about a quarter of the price it was 2 years ago. So even though electricity is all the same, very valid point, it's a great point, the cost of it is volatile. It goes like this. So in simple terms, I think the natural gas, y'all could probably tell me it's sold in MMBTUs, is that right? Yeah. So in 2007, it was around $13 an MMBTU. And you can reference any historical research report to find that. Today it's around $4. That means do the math on that, but that's triple the price, almost quadruple the price. And my point is that my natural gas today, which is very safe and inexpensive today, may not be tomorrow. And the guys that lend the money, this Matsu who's going to lend us the money against that plant, he doesn't, because these have got to be recovered over 25 years, he doesn't like uncertainty. He doesn't like volatility. He likes, I want to drive down the lane, I don't want any bumps, I don't want to dip and come up and down, I want it smooth. Because if I can't financially underwrite for that, it doesn't matter how good your technology is, it doesn't matter how efficient you are, because you've got price volatility. And right now, and I asked these guys today at College Station Utilities, you can't get a natural gas contract for more than 3 to 5 years. And the reason you can't is because Mr. Natural Gas guys over there saying, they're at historical